Two of the most hyped words in the last 3 years are AI and insurance. Okay, well, one of them's hyped. Today, we're betting that they end up in the same sentence more often than anyone expects. Hi, everyone. I'm Ollie, today's host, and today's premise is super simple. Have you heard of AI? Have you heard of insurance? Great. We think it's time that they should get together, and we're here to discuss that today. Insurance is a business that's been around for about 2,000 years, and it's been quietly waiting for its moment. And AI, well, AI is AI. So the question that we're chasing today is, what does this industry actually look like 3 years from now in April 2029? And to argue about that, or hopefully just have a friendly, amicable chat, I've got two founders who are building in this exact intersection. I have Freddie, the founder of Prompted. Welcome, Freddie. And I have Tim, the founder of Malcolm. Welcome, Tim. Let's get started. So I want each of you to describe your company in 15 seconds or less. And your company has to sound interesting, not safe. Ready to go. I'm going to throw it over to Freddie. Prompted in 15 seconds.
So essentially, if a GPT is looking to choose insurance for a user, how can it make that choice? Is it going to make it on price? Is it going to make it on the user's needs? Is it going to make it on the policy details? How do you marry all those things together? It's actually really complex, and there's a risk that it makes the wrong choice, and the regulator gets very interested if it makes the wrong choice. So we sit in the middle and we make sure it makes the right choice.
Freddie. Tim, introduce Malcolm in 15 seconds.
Yeah, sure. So Malcolm, similar but a different tack, I guess, is the rails that lets AI agents sell insurance, generally in more retail sense. So today, ChatGPT can talk about insurance, but notably can't sell it, with a bit in the middle, as it were, between the AI and the insurance pricing engine that turns that conversation into bindable quotes, essentially, in the right way.
Thanks, Tim. You said lots of things to do with insurance that sounded technical. You said binding or something bindable that people might never heard of. So how would you introduce Malcolm in 15 seconds for someone who's never worked in insurance, but only bought insurance?
Yeah, sure. So I think we're seeing now that you've already got millions of people globally, perhaps, that are doing things like saying, help me with my car insurance renewal in ChatGPT. There's loads of relevant conversations that are happening, but they kind of all end at the point of, here's some information, go and sort it out yourself, essentially. And that's great, but we think there's a much neater endpoint for that conversation where you bring those products into the chat to let people have, I guess, the most elegant, like straight through experience and get all the information they need to close that out in one loop, essentially. And that's what Malcolm enables.
Fantastic. So I'm going to ask you guys to steelman with me. What's your best argument that AI is going to change absolutely nothing in insurance in the next 3 years? Starting with Freddie. So give me the bear case.
I think the best argument is history. So if you look at the last, 250 years of insurance, it hasn't changed that much. So I'm sure there are a lot of people looking at that history and saying, well, why is it going to change significantly over the next 3 years? And I think the answer to that is actually every time insurance distribution, so how people actually buy insurance changes, that fundamentally changes insurance. So that's whether it was branches opening for for insurance brokers, whether it was telephone insurance purchases, whether it was the internet and price comparison, it changes insurance. And this is one of those distribution waves that happens maybe once in a generation, and that's why it's going to change. But the bear case is insurance never changes. But I think this is one of those examples where that's wrong.
And Tim, do you agree with Freddie? Do you disagree? Has he got some holes in his case for why AI is going to change absolutely nothing in the next 3 years?
I generally agree. I think maybe add on something, if I were trying to anti-pitch Malcolm, you'd say something like, people don't want to talk about insurance. Like fundamentally, this is not a thing people enjoy doing and are sort of willing to invest lots of their time in. We're obviously in various parts, like me and Freddie, a bit different, I guess, but in various parts of enabling people to have conversations with and about insurance. And you could, I guess, say that's just not a thing humans want to do, which is fair enough. I think there's some interesting counterpoints to that, which we can come back to in a sec, perhaps.
Thank you. Right. Time machine time. And putting the setting on the little dial thing to April 2029. And I want you to describe a specific scene rather than a trend. And describe to me what the act of buying insurance actually is going to look like in 2029. So Freddie, walk me through this scene. You know, a human, hopefully we still exist in 2029. They need travel insurance. the steps they need to go through from the moment they realize they need some travel insurance to the moment they're covered.
Yeah, so I imagine they'll be wearing glasses with AI integrated, or they'll be having headphones with AI integrated and probably cameras in those headphones. I know Apple have started talking about those already. They won't be wearing something like this, which looks like it's from the 90s. And what will be happening is that they'll be saying, my insurance is due. I'd forgotten about that. Whatever they call their AI, let's say it's Claude. They say, hey, Claude, can you find me some new home insurance or some travel insurance for my trip to Mallorca or whatever it is? And Claude will go away and say, yep, I know all about you. I know all about insurance. I know all about the needs you have for traveling to Mallorca. And I found this policy and it's just right for you. Do you want me to buy it? And the user will say, yeah, sounds good. And they'll trust Claude because they know Claude always gets it right. And they don't care about the underlying services or processes. They just know, if I say yes, I'm insured and it's a good product at a good price. Done. And that's it.
And in that process or experience for the customer, what do you think's the bit of that journey that's going to feel most different or most alien to someone who, let's say, just bought some travel insurance this spring?
I think they'll find it slightly disconcerting that they have to do almost nothing. And essentially they have a PA, a personal assistant in their ear, who can just deal with these administrative problems. And I think it goes to something Tim was saying a minute ago, which is people don't want to talk about insurance. So when we're thinking about AI, we're thinking about AI taking the problem away, not creating an opportunity to talk about the problem. Nobody wants to talk about insurance. I mean, I hope some people want to listen to us talking about insurance, but actually your average user doesn't want to have a chat about it. They just want it sorted. And that'll be the disconcerting piece, which will be, it is just sorted.
Tim, we're in the time machine. We've gone forward to 2029. Same exercise in terms of describing the scene, but from the insurer's perspective or the insurer's side. So if you can describe for me the steps that an insurer's going to take in this future to provide a customer with cover.
Yeah, I think the interesting thing about Malcolm and I guess a few of us in the space is that fundamentally not a lot necessarily has to change. I think, as Freddie described, the user experience side of this and the user purchasing journey will be wholesale different to how it is now. And it's hard to imagine in many ways that isn't the case in over a sort of 3, 4, 5 year horizon. But I think for the insurer, I think provided you can expose your products to AI in the right way, and you have APIs that allow you to do that, so some sort of entry point for these AI agents, and you have the right information that describe your products out there that can be interpreted and accessed and played back in the right way, really you don't have to see that same kind of full paradigm shift the whole way down the stack, I think, which is quite a neat thing because every time you require that to happen, I think you've mega ramped up the difficulty level for those products actually meeting the people they need to. And that's, I guess, the nice thing about where we are now. You don't necessarily have to envisage something so radical on the insurance side of it, provided obviously the products and the information keeps up with the user demand, which I guess goes without saying.
And then just kind of zooming out a little bit in terms of how insurers might be looking at this or thinking about it. Do you think there are, with AI, parts of the workflow that are going to completely disappear? Would you expect insurers to continue managing the same kind of workflows? Is there still going to be a lot of manual work within the insurers?
Yeah, I think a lot of that manual work goes away. I think that's something you're going to see play out across a lot of industries and not necessarily the most hot take for us here that you see that in financial services. A whole load of complexity, I guess, in different parts of the insurance industry. Like some of the lines of business Freddie will know better than me. It's a different thing to say manual work goes away, I suppose, than it is for like a sort of, I don't know, motor brokerage perhaps, or at the sort of small commercial end or retail end of the spectrum. But I think that will play out differently. Yeah, I think whether it's insurer side or consumer side, you can expect that some of that sort of general drudgery of going through the steps disappears pretty quickly from now, to be honest, and it's just not there over a few year horizon, both on the actual quoting underwriting side and also on the sort of management of those policies and claims and whatever else kind of down the stream, I suppose.
What I want you to help me do is complete this sentence. So, in 2029, the average person will buy insurance without ever ...
I think that the sort of controversial take is potentially like without ever knowing about it. Like if you can give the intent to agents that genuinely autonomously on your behalf, subject to like certain constraints and boundaries and whatever else, then you could conceivably not even know that your renewal's been taken care of. It just happens. And that's quite an interesting, exciting scenario, I think.
Okay, so we've talked a little bit about the future 2029 and how different the customer experience might be, and actually how involved, if at all, the customer is in that process of buying insurance. But what are your guys' points of view on whether insurance products are actually going to change? Or in 2029, are we still going to be kind of buying the same old stuff and protecting the same old things in the same way? Probably throw that to you first, Freddie.
I think over the last few decades, there's actually been quite a limitation on innovation in insurance products because it's all been about price. So when your primary measure for the user is price, then as an insurer, actually you don't get any reward for having a better product. You don't get any reward for having an innovative claims process. You just need to keep the costs down and you need to keep the product price down. AI creates an opportunity to change that if AI is able to scrutinize policies and compare them in meaningful ways. So that opens an opportunity, but also if AI is able to understand what a user needs in great detail very rapidly, it creates opportunities to create policies on the fly. So you could, as an insurer, instead of having a generic policy that you serve to every user at a slightly different price, you could create a policy for every user by banging together components of insurance and getting a policy that's just right for that user at that moment in time. So I think innovation in insurance products is something that's going to suddenly come to the fore again, where perhaps it's been stifled for the last few decades.
I think that's a really interesting one. I'm trying to sort of wrap my head a little bit around the mechanics of how that would happen from like a underwriter brain head on and a pricing engine brain. But yeah, I think you're totally right that you get this kind of weirdly artificial divide sometimes of this is this product and it covers these specific things. And it's like some intersection between these two and then totally different products that definitely are relevant. And you have insurers constantly trying to cross sell these things. And it's really difficult because you've packaged them up so differently, talk about them so differently, market them so differently. When I agree completely, Freddie, like, there is a lot of relevancy across these things. And actually, if you just know what perils someone or their business is exposed to, you can be way, way cleverer in terms of how you actually match coverages to that and get the right products in front of the right people. So that's a massive opportunity, but yeah, definitely a technically tricky one, I guess. Just think about how that comes together from a insurance point of view.
Okay, a bit of a prediction time. I want you to give me a prediction for one thing about insurance in 2029 that would make a current insurance exec physically sick.
Oh, sick. Interesting one. Maybe like sick with joy. I don't know. I think there'd be an interesting thing of who is biggest in the market or most prevalent in the market won't be who spends the most on marketing. It will be who is most embedded in these channels, like who is most available when, as Freddie mentioned earlier, when the landscape, how people access products changes completely. That is not just going to be who spends the most on above the line, like who has the splashiest ad campaigns, whatever. And there's a whole new layer to that it changes things quite fundamentally. You might well not see that distribution costs are the biggest line item on an expense balance sheet, on the expense part of a balance sheet in 5 years' time, which is interesting and not how it's been for a while.
I think you could, if I were an insurance exec, I'd be worried about a hard reset on brand equity. So by that, I mean brands that exist in the insurance market that are very large, that have built brands over literally hundreds of years with millions of customers, are kind of household names. There could be a really hard reset on a brand and what that means from within the context of a buying decision. So does it move to actually, I want the most honest or detailed, clearest understanding of cover or policy and want really good transparent data about claims rates and claim settlement speed versus what we have today, which is big brands, and to your point, Tim, with lots of money pumped behind them, with audacious claims of 99% claim settlement, which if you just
fraud,
a little bit below the surface is complete nonsense. So yeah, it could be really disruptive and actually one of the safety nets for big players of brand, including some of those big distributors and price comparison websites, could effectively just be back to zero.
Yeah, I think it's definitely got to be a concern. I think the way I think about that is that there's like brand weight doesn't go away. If you're a big insurer that has existed for a long time and has been part of, I guess, the general zeitgeist for a while, but that's all in model training data, right? That's not completely scrubbed clean. What does exist definitely is there are now, as you alluded to, Olly, layers of stuff you have to do on top of that to make sure you do stay present at a conversation. You are presenting the right information in the right way to a variety of services. I think GEO, AEO is definitely part of this picture, not the whole thing. But yeah, that landscape has changed a bit. But I think if you're a big brand, you've got a head start there, I would say.
Okay, time for controversial prediction. Give me one thing about insurance in 2029 that would make a current insurance exec physically sick. Throwing that to you, Fred.
So I think there's two elements that combine. So one of them is brand, which is, does brand equity diminish? But also, what is the brand that you're buying off? So am I buying insurance off Aviva, or am I buying insurance off ChatGPT or Claude? So who am I trusting? Am I trusting the brand that the insurance is under, or am I actually trusting the recommendation from the LLM? And potentially there's a world where I'm trusting the LLM more than I'm trusting the ultimate insurance brand. So that's very interesting because the whole branding piece shifts. But then allied to that, the thing that would make an insurance exec potentially a little bit queasy is, have I exposed all of my pricing and quoting mechanisms through an LLM? Therefore, I've turned that LLM into a super aggregator because it can search hundreds and hundreds of different policies and insurers, and it will always manage to find someone cheaper than me. And that's very worrying because I know some insurers are concerned about pricing through price comparison today. If they open the box and allow all of the prices onto LLMs, what does that mean?
Yeah, that brand shift and things just generally getting a little bit strange with big AI, let's call them assistants, I think is fascinating, not just in insurance, in every category, but in insurance, how does it play out in a world where bet would be, as human beings, our brand loyalty to something that we feel affinity to? All right. Kind of another human will always attract more loyalty than a legal entity. So my ability, even with a brand like Apple, to kind of get an emotive relationship or like with that brand and feel like I'm an Apple person versus my ability to do that with Claude, who's, now doing 99% of my job for me, right? And basically earning my money and feeding my family. I think it's it's going to be transformational and big brands beware.
Yeah, it does raise an interesting question, I guess, of regardless of who the affinity is with there is also a brass tacks question of like who the liability and burden of regulation, etc., is with there. Who could say exactly how that shapes up over the next few years? But I think it's unlikely to be the case that is the model provider in every jurisdiction, in every line of business, and whatever else. It's just a weight of burden and complexity that, generally speaking, their model doesn't support, I think. So that's one we have thoughts on at Malcolm, and just an interesting question, I guess, of in this new paradigm when this is existing and like free flowing in these environments, how do we break that up and how does the regulator think about where the perimeters are here and how that works? You could talk about that on for hours, I think, and it would be obviously riveting.
Okay, we've painted a somewhat pretty picture about the future of insurance. Levels of innovation, great customer experience, removing a bunch of friction for us all, making it less boring, which is fantastic. But what do we think actually has to break for this world to exist? So we're going to step through some blockers that might exist. So first up, we're going to start with regulations or the regulators. People will have heard of the EU AI Act. They would have heard of the FCA. They're busy figuring out what the UK's position is on AI. And then you've got the US, which, if nothing else, is going to be highly unpredictable in terms of the regulatory sort of agenda and how that plays out. But do you guys think the regulatory landscape is bottleneck for that future, or actually is it something that could help get us there faster or make it more likely to come true? So Tim, with Malcolm literally built on compliance, what's the unglamorous regulatory sort of viewpoint?
Yeah, I think this is not mega hot take stuff, I guess, but I don't think it necessarily expedites or inhibits this. I think it is the necessary guardrails, right? Like the regulation exists to keep people safe from things going wrong here. And but like it or lump it, insurance is a product category. There is lots of potential for things to go wrong with like real impact for people. So that's appropriate. I guess the question is, how do we navigate that and also get the juice out of it? And how does the regulator look at how we get the juice out of that? If we can genuinely to the conversation we've had so far, I guess, produce better outcomes for people here, like make better informed purchasing decisions, get the right products to them at the right time with AI that we haven't been able to do before. So I think there's clearly a need for clarity of exactly how this should work, and to the point from before where the perimeter should be and whatever else that we'll need to see come out over the next couple of years, I guess. But yeah, I wouldn't necessarily see it as something that either slows down or speeds things up. I think it's kind of the table stakes, and it's for all of us building in this space to sort of make sure that we stick to those standards once they come out, I guess, and play a part in shaping them.
And Freddie, for prompted, there is a regulatory wall. Where are you going to hit it and it slow you down from what you want to get done?
I look at it the other way around, actually, which is the regulation is, if you look at the spirit of the regulation rather than the letter of the regulation, and you think about assessing what a customer needs in terms of their demands and needs, and you think about offering fair value, a lot of insurance distribution at the moment meets the regulation, meets the letter of the regulation, but it's arguable whether it meets the spirit of find the best policy for this user at this moment in time, given their needs and understanding of their needs. So I look at it with prompted as if we can use AI to actually honor the spirit of the regulation, not just the letter of the regulation, we can offer a fundamentally better experience for the insurer and for the customer. So I almost look at the regulation as a standard that we can meet, where historically perhaps people have passed the regulation without necessarily really thinking about how to serve the customer's best interests.
Yeah, I agree with that, Freddie. Take examples like, if you go and punch in motor insurance quote now to one of a few different comparison sites, not knocking it, but you will quite often get at the top high excess, really stripped back products, because it is a price competition, and so it is about how you appear at the top. And so you get these products that maybe don't necessarily cover everything that you would want them to the extent that they should, almost kind of implied as the default. And I think it is definitely an interesting question of, is that the best thing for everyone who purchases those products? There's lots of room for improvement there.
Yeah, I think if you step back and you, instead of looking at the regulation as, oh, it's a burden that I have to meet, if you look at it as, what is this regulation trying to achieve? And often it's trying to correct gaps from a consumer perspective. We have opportunity to fill those gaps today because AI enables it. And in that sense, I think regulation's a massive bonus, because it allows us to have a standard where we're going to do things better. So I don't see it as a blocker in the same way.
I think the regulator has done a terrible job in insurance. I can't believe we have insurance buying journeys that exist the way they do. Like you said, on a price comparison website where the variation on price is obscene, I can see something at the top which is clearly not in my interest and provides hardly any cover. And the quote can still change when I go through to buy from an insurer. Oh, and I had to answer about 58 questions before I even got a quote. So yeah, it sucks. Not good enough, but I don't expect them to get any better between now and 2029.
But I think this is the point, right? Where this is, all of these distribution channels meet the letter of the regulation, and they're reviewed as doing so. But there's a spirit behind that regulation that we can aim for and we can achieve, both with Malcolm and with prompted, and we can give a fundamentally better experience.
And if I do run a regulated business in the future, I'll just add this caveat to my previous comment, which is I do like the fact that the FCA is a principle-based regulator. And to Freddie's point on spirit, the principles-based bit is excellent. The problem is typically the interpretation of the principles and the desire of very large incumbents to have the regulator say this is compliant, which is nonsense because it's a principle-based regulator. So I would argue you can't be FCA compliant. You can only understand the principles and protect consumers. Anyway, get off my regulatory high horse. Let's talk about another potential blocker. We've touched on them, but incumbents. Obviously, we love incumbents. They're a natural part of any market, but as the upstarts, we're here to disrupt them and take share from them typically. So what's the single thing that traditional insurers you think are getting most wrong about AI right now? So what mistakes are they making? Or if you want, you can actually give props to an incumbent that's doing something genuinely interesting or progressive and not getting enough credit for it. I'll go to Tim first.
Yeah, I think you have to give props to people who are already experimenting in this space, I guess, and made the investment and taken the punt that this is not a stable, mature market yet, but they still want to get ahead of that and deal with that complexity. You have to respect that as new startups like us. On the other side, I think the mistake that we'll see a bit of I think, is thinking you have to or necessarily can solve this all yourself. There are parts of this that are market-wide shifts, and regardless of how capable your teams or sort of how deep your pockets, I think there are parts of this where you're not going to be able to sort of bludgeon the world into the shape that you want it to be necessarily. And there are elements of adopting standards and adopting certain behavior patterns that just kind of need to come out, I think, as standards. So we'll see how that goes. That might age badly as a take, but I think it's not going to be one where everyone comes up with a heterogeneous solution to the same problem. I think there does need to be some commonality there.
Yeah, Freddie, what's your thoughts? Maybe more on kind of like what are incumbents, what are they getting wrong?
So I'm not going to be too specific because that removes an opportunity for us that prompted. But I think, broadly speaking, the idea that you use LLMs, so ChatGPT, Gemini, as a channel for your existing process of selling insurance, that's the fundamental mistake. Because you're essentially saying, if you look across any insurance website, price comparison or direct, I get the user to fill in a long form, then I run a quote, then I give them a price, and then I can make edits to that and go through the whole sequence again. Let's just put that in chat. That doesn't really work. And we've seen examples of that are live at the moment. And they're essentially using ChatGPT as a top of funnel marketing channel with indicative pricing that then drives users to that form-based experience. That's fine for now. But if insurers are thinking that's what the future looks like, I think that's the fundamental mistake, because it's going to look very different. And that goes back to what we were saying before, which is, how am I going to buy insurance in 2029? There's no forms involved. There's no endless questions involved. It's a whole different sequence.
Yeah, I think there's an interesting thing in that. I maybe would take a slightly different angle on parts of it, but definitely agree that just kind of doing the initial exploration and not committing to it and making sure you actually can deliver better, richer experiences for people is a big blunder, and kind of is worse of both worlds to some extent. If you can't surface, exactly as you're saying, cleaner experiences, and you have all the enrichment and user centricity that you need to do that, then I'm not sure what you've necessarily changed. And I agree with you, Freddie, there that there's a kind of commitment to it that's required to do it properly, and make sure the actual outcomes are good ones.
Okay, and then another blocker. Let's talk about trust, but be more realistic, because it's not actually trust, it's blame. So when a customer gets an incorrect quote or given some instructions on how to harm themselves while they're just trying to get travel insurance, who's going to get the blame? Is it going to be OpenAI, the broker, underwriter, you guys building AI products, the insurer? Where do you think, if this happens in the next 12 months, who do you think is going to get the blame?
I think if it's the next 12 months, I mean, firstly, who knows is the actual answer, because this exact question is being tested in a couple of fairly meaty courts in a few different countries at the moment. So ask me again in 6 months, and I guess we'll have some statutes to point to perhaps. But I think that the practical answer to it is to be really clear about where the lines are on certain patterns of behavior. So something which is entirely outside the domain of insurance, that an agent just voluntarily surfaces to a user in some sort of grotesque hallucination. For me, that is agent behavior. That's agent responsibility, and by which I mean like the foundation model provider, whoever it might be. You volunteer a domain like insurance, and then you don't appropriately guardrail that conversation specifically, and you don't have sufficient control over it, then I think you do open yourselves up to the question of whether it's the solution provider or the insurer or whoever else. Someone, I think, is likely to have to carry that candle, and that'll be tested, I think, over the next couple of years. It'll be an interesting one. But there's some division of responsibilities, I think, a little bit there. And also a bit of a working brief, I guess, for everyone involved in this, not least OpenAI and Anthropic, to make sure they surface the kind of right visibility and right information to partners as part of this process, to make sure that governance can happen in the right way, essentially. So I think it will be a learning process for everyone involved as we go.
Okay, we've talked quite high level about setting the scene for what insurance kind of purchasing could look like in 2029. But I want us to go into maybe some other use cases, killer use cases, if we combine kind of AI with insurance. What do you think, Tim, what's the single killer use case that you are excited about at the moment, where AI and insurance really kind of combines and shifts us kind of from interesting to transformational, kind of game changing.
Yeah, I think I have to give an honorable mention to the thing from earlier about designing products on the fly to suit particular needs and circumstances. I think that's awesome. Very excited by that. But I think the one that's perhaps more bread and butter here is the kind of thing we alluded to earlier, I think, of when you can have a renewal invitation come into someone's inbox and without them having to do anything about it, their assistant can pick that up, go and do what it needs to solicit their new quotes and present back some options. They can just kind of one shot the best thing for them for next year. That sort of genuinely better outcome at zero ag for the user, I think for me is that's the real proof in the pudding that what the situation we're anticipating has come about for me.
Freddie.
I think the fundamental shift is that we go back to a world where you have an insurance broker. So somebody who cares about you in terms of your needs, what's best for you, and then finds you the right policy. The only difference is that insurance broker is an AI, not a human. And that's the fundamental change, is that you're getting the right product for you, but there's no human involved. And we've gone through a phase where there was virtually no human involved because it was all through a website, but it was generic policies, an impersonal process, and it felt pretty stressful as a user. Have I answered this right? Does this cover what I need? Well, now the AI holds your hand, finds you the right policy, and it's like having a broker again, just not a human one.
I've got a killer use case, insurance and AI. I've been pitching this idea for like 5 years and it's not landed, which is single policy for everything, just taken from my pay. So my monthly pay slip comes through, if assuming that like I'm employed, and there's just a line that says protecting shit basically, and it's got all the data, right? AI has got all the data, so it's my life cover, knows what I'm driving, how much I drive, does all of that kind of stuff, protects stuff in the home because I'm connected through the Hilton, I've consented to everything. But yeah, like single policy for everything and stop this multi-policy profiteering and just aggregate the risk across me. And the only good counter argument I've had is, that concentration of risk. If we were progressive enough about how to use AI in underwriting and maybe brought our favorite friend, the regulator, into play here, because I think they'd want to stop that happening. I do think this is the single policy, probably for the first time, is really possible from a technical perspective. We're still in 2029, which is nice. Who wins that nobody's talking about? Obviously, you two guys win, a bunch of other kind of AI startups win, but who's going to win from this future that no one's got an eye on or talking about?
I think I can. This one maybe is more for you, Freddie, than Malcolm right now. But I think there's definitely it also sounds really hackneyed, but I genuinely believe it. There's a whole suite of people that either don't buy insurance right now that really, really should, or kind of buy the wrong sort of thing. I think the classic use case I always go to for this is like the SME, small business space. There's millions of small businesses that could pay, frankly, a very small amount to insure away risk that could be terminal for their business. And it's like often cited as the demographic where there is poorest penetration of the products that could take that risk away from them. There's structural reasons why that's the case, like lots of heterogeneous risks, low premium base, so conventional brokers can't necessarily serve it. I think there's a golden solution to really do something that is beneficial for them. And then like, if you wanted to be macro about it, genuinely economically advantageous, if you can enable that whole massive majority of the economy segment to be more effective, essentially. So that's a big one for me that is well worth thinking about.
And I would agree with that 100%. I think that segment exists. There's something like 50% of small businesses, very small businesses, are uninsured. And they're just too expensive for brokers to interact with. The cost of servicing them is too high, so they remain uninsured because the prices of the products don't reflect the risk. I think going back to your question, Ollie, who's the unexpected winner? I don't know if it's unexpected, but I think you're going to see insurers, if we're talking about insurance, small insurers that you've probably never heard of, who actually really understand their market. They underwrite really effectively for that market, but they don't have marketing budgets and they don't come to public attention. AI is going to find them and it's going to surface them in ways that historically they've never been able to do. So I think insurers with high quality products serving specific niches are going to be winners that nobody's really aware of. And I think similarly, there's going to be data companies, and it's not it's not revelatory to say data companies are going to do well from AI, but they're not the sexy publicized companies that everyone's talking about. But people like ClearScore or De facto or anyone in that space where they own huge amounts of data, their value is going to soar because they know how to collect it and they already have a huge lake of data that they're sitting on. If you can sit on a lake.
Interesting. That was going to be my bet. I was going to say Experian. They always win. Hopefully they'll get outmaneuvered this time because they're lazy. But they seem to win by being lazy. Yeah, in theory they can backsolve. If you saw Revolut launching like a true, like their own foundational model for finance, come on Experian, like I'm literally calling you out. Where's your foundational model for every data-driven category? Insure, you can't do money because Revolut obviously will beat you to it. But they've sat on a whole bunch of data and actually does the origins of Experian and those competitors that came from marketing lists and addresses.
Yeah.
So I think that's just something they're sat on there. But okay, switching the pace slightly, hot takes round. I'm going to say a statement and you're going to tell me if you agree or disagree. Hot take number 1. The next unicorn in insurance is not an insurer.
Agree. On the grounds that, like, if we're talking right now, the capital constraints you have to have as an insurer to be able to grow that quickly and differentiate that much, I think it's more likely to be a provider in that space than it is the insurer itself, would be my gut feel.
Well, let's disagree. I disagree because actually you can do all of the underwriting with AI and automate all of the processes. Somebody's going to come out with a really, really incredibly lean insurer and find someone to give them the capital to build it with. So there is potential, if you can get all the pieces in place, to be a unicorn insurer from nothing. It's a bit of a stretch, but it's not impossible.
Hot take 2, within 3 years, more than half of personal lines policies in the UK will be sold or originated through an AI chat. If either of you say disagree, something's gone wrong. But make the case. AI chat, not a form on a website.
I could disagree on the number, I guess, not the direction. The direction, wholesale buy, otherwise why am I here? Whether it be 50% or 25%, like we could argue that, I guess. Either way, you're talking about billions and billions of pounds of GWP and millions of users. So I think, meaningful regardless, number, who knows?
Yeah, I completely agree as well. And I think the interesting thing is I heard you say personalized policy, but you probably said personal lines. I don't know. But that's a layer to it, which is not only is it personal policies, but they're going to be increasingly personalized policies.
Hot take 3, AI makes insurance cheaper for customers. True or vibes?
It's going to be true. Now, that doesn't make it better, but you're going to be able to find something cheaper. And if you want the cheapest, then AI will help you find that. I'm sure of that.
I think I'm torn between vibes and true. I think it should be true on the grounds that you're cutting out, I think, potentially like a decent chunk of distro costs you mentioned earlier. I think maybe vibes on the ground that getting the right product doesn't necessarily mean the cheapest products. And there are a lot of drivers of premium costs that are actually nothing to do with things talking about today that would be bad vibes to talk about probably. But that I don't see going away in the near future. So tough one.
I think vibes like meme vibes right now would be, let's say, the cost of providing insurance gets cheaper and that should be passed on to the customers. But the token costs for the LLMs that are doing all this amazing work goes disproportionately up. And all of a sudden, I'm getting my insurance renewal through ChatGPT and they're saying it's doubled. And I'm like, what a WTF? And they're saying, well, you did spend half an hour going back and forth. So that cost £3,000 in tokens. We'll see.
You've got two things here, though, right? You've got, should it cost less or will it cost less? And the operational costs of serving insurance should fall, but then there may be factors that go against that. But I think the ability to find cheap insurance will improve, and that will mean that people buy cheaper insurance. We know that that's the pattern. We know that's the behavior. We've seen it with price comparison. So your ability to find cheaper insurance will increase, and that will mean that people buy cheaper insurance.
Okay, hot take 4. Founders Factory will back at least one more insurance times AI company in the next 12 months.
Only one.
Send it.
You're obviously running short on ideas, Ollie.
No, it's just I've got so many in this category. And that's why, I could go for 10 more, I reckon. Okay, final stretch now, guys. Lightning round in one sentence or less. Prompted or Malcolm, whose product's more obvious in 2029?
Prompted. I think Malcolm, if it does a great job, is largely invisible. So I think, yeah, has to be prompted.
Yeah, prompted for, as Tim described, Malcolm sits below the surface, and if it's doing a great job, nobody knows it.
Okay, one word for insurance today.
Absent.
Stressful.
And then one word for insurance in 2029.
Present, I guess, as the corollary.
Seamless.
And then the company, solution, product, startup, not yours, that you want to see built in this space.
We've sort of covered this already, but I think somebody should be producing insurance on the fly for consumers.
Well, we have clearly heard of AI. We've clearly heard of insurance, apparently more than we expected. Freddie, Tim, thank you very much for joining me. That was excellent. If you guys listening want to see what Freddie's building, go to prompted.insure. And if you want to see what Tim's building, it's at trymalcolm.com with L's, more L's than I thought. If you want to see what I'm up to, then ask someone else because I'm far too busy.